Welcome to Credit and Bankruptcy with Reed Allmand. Reclaim your power for financial independence. And now, your host, Reed Allmand.
Hello everyone, I'm Reed Allmand, and we are starting another episode of Credit and Bankruptcy, where we help you reclaim your power for financial independence. I'm really excited about the show we have today. We're going to delve into the biggest issue and question I always get when I'm talking to somebody who's considering bankruptcy, and that is, how is bankruptcy going to affect my credit? Am I going to be able to get credit after I file bankruptcy? We're going to delve into all that today, and we have a special guest host with us who's going to help us sort all that out. It's Philip Tirone. Hello, Philip.
Hey, Reed. How you doing? Good to see you.
Good to see you. Thank you for joining us today. I've known Philip for over 10 years approximately, and we've worked together, and he provides a great service to our clients who are going through the bankruptcy process, helping them come out of it and take those first steps to get the credit reestablished. And so he's very experienced with credit and bankruptcy, and so we really want to go through it step by step today and let you know what to expect when you're considering bankruptcy as an option. So Philip, tell us a little bit about people who are considering for bankruptcy, some of the common questions and concerns that you hear, and what do you normally tell them when they're considering bankruptcy and worried about their credit?
Well, without a question, I think most people are considering bankruptcy think that their credit is going to be absolutely ruined for 10 years, and like bankruptcy is going to be this ball and chain with them for years. And once I started unpacking this and teaching people how easy it is to rebuild a credit score after a bankruptcy, and this is after a Chapter 7 or a 13, they start realizing, this is not a big deal. Because literally, if you start rebuilding your credit around the bankruptcy, you can have a 720 credit score in 12 to 24 months after either the discharge of the 7 or the confirmation on a 13, and it happens all the time. I mean, I know that we've had over 80,000 people through the program, and just I see the results on a week-by-week basis.
Well, I'm glad you said it, because I tell my clients that all the time, and I could tell in the back of their eye they're kind of, of course he's going to say that, yeah. But I'm glad you said it as a third party, but it's the truth. I mean, if you do the right things coming out of the bankruptcy, a lot of times your credit score can go higher than what it was before.
There's no doubt. I mean, for sure, right? I mean, these people who are struggling with debt, they don't realize there's a lifeline, right? And I can go on and on all the reasons why credit scoring is bad, and like there's problems with the process. But the one good thing, the saving grace about the credit scoring process, is that you can rebuild it fast, right? You can rebuild it if you do the right things, and that's obviously what we'll be talking about today.
Okay. Well, why don't we kind of delve in a little bit about the credit score model and kind of help people understand, how do the bureaus come up with the score to begin with? What factors drive that credit score?
So first of all, we got to understand, and I hear this question all the time, there's 3 scores. Why do I have different scores, right? They're all different. And when I wrote the program and I wrote the lesson on credit scoring, I actually ran my credit score from all 3 bureaus to annualcreditreport.com, myfico.com, paid for all the scores, and all 12 scores were different. And from the lowest score and the highest score, there was a 67-point difference from the lowest and highest score, right? Makes no sense. And the reason why is, one, they all have different algorithms, right? So, but for the most part, there's broad strokes, right? And I'm going to specifically talk about bankruptcy. There's always this litany of 5 things that impact a credit score. I'm going to talk about people with debt and people with bankruptcy specifically. The win here for people with debt is people are struggling typically, right? Our typical client, the client that comes in after a bank or during considering a bankruptcy, is sort of like maxed out on their credit card bills. They're like, their head's barely above water, and they're like, what do I do here, right? And that's the utilization rate. So the first thing out of the gate is your utilization rate. When your utilization rate is maxed out, it's having a seismic impact on your credit score, right? So that's the first thing for our type of clients, people who are considering bankruptcy. Second thing is, you get one late payment turns into 2 late payments, as you know, and the people watching this program, one late payment can be late fees, and then those late fees start compounding, and you can't get caught up, right? That has a significant impact, obviously, on the credit score, late payments. And then when you can't get caught up, one late payment turns into 3, which turns into a charge-off. All those things bring your credit score and drop it like a rock, right? Obviously, I mean, there's no secret sauce here, right? But that is what we see the most from people who come into our program post-bankruptcy or post, considering bankruptcy.
Yeah, when you were talking, it made me think of a couple things that I always hear from clients is one time they tell me, they reassure me, well, I have really good credit. And a lot of times the people that I'm seeing who are considering filing for bankruptcy have excellent credit. And they kind of think that that's like, something that's odd, but it's actually very common. I mean, because if you do not have a good credit score, then you're probably not going to be approved to incur debt, which then can potentially be a problem for you.
No doubt. Well, I mean, for sure, everyone who's considering a bankruptcy, because life has happened, right? And it's not so much a fault of theirs, it's life. I mean, how many times have we seen people, okay, you get in a car accident, something happens, family member gets sick, medical bills, right? You make just a bad decision. I mean, that's what happened to me. I mean, I wrote the program because I made a bad decision personally, right? Which is why my credit score was low, which got me on this path. But it's these things that get us put in there. But everyone who has debt, everyone in this problem at one point had great credit, as you said, because that's why they were given the credit.
Right. And you talked about, there are people out there who, maybe got overextended or, made a commitment that they thought was going to come through and it didn't. But even right now during this pandemic that we're having, credit card companies are tightening the belt. And so you talked about utilization rate. So even if you have available credit right now, you're paying on time, everything is great, they're shortening those credit lines because they see that there's potential risk out there. So your $30,000 limit may be squished down to 15 and you were at a 50% utilization rate. Now you're at 100%, your score goes down. And that's happening to a lot of people.
Oh, it's happening nationwide. And this is why, as an aggregate, the credit scoring is going down specifically because the late payments and then, the utilization rate and then the late payments that come after that.
Right, because the credit card companies right now are trying to limit their exposure. They know that people may be unemployed and they may be using the cards more and they're concerned about their ability to repay. So I want to tell everybody out there who's listening a little bit. So we've talked a little bit about, credit, the common questions and concerns, why people may be put off talking to an attorney because they're worried about their credit. And we've assured you and let you know that bankruptcy is not the end of your credit history, your credit path. It actually sometimes is the beginning to a brand new restart that can happen as quickly as a year and getting that turned around. And so I wanted to share a little bit with everybody. What should they expect if they contact our office, and what kinds of things regarding credit are we going to help them with? And so the first thing is, right now, when we're having this pandemic, there's different issues in every county, and we're primarily based here in Texas. And we're helping people all across the state. So if you're considering bankruptcy, you want more information, it doesn't matter if you're thinking about this year, next year, or whenever, we offer a free virtual consultation. So we're set up now where we can let you get login and password to our website, where you'll be able to interface with our bankruptcy professionals right through there. Any smartphone, tablet, desktop, you can talk to us face to face, you can securely exchange documents, and you can do everything regarding the bankruptcy case from the comfort of your home, from beginning to filing the case, including the appearance that you have to make with the trustee, all virtually, all 100% from your home for the foreseeable future, all the way up until the end of this year. So if that is something you're considering, I want to reassure you that we're here to help you to do that. And you can reach us at 214-265-0123, and option 1 will be able to help you. Number 2, every single person who comes in and wants that information, we're going to help you pull your credit score right now. And we're going to tell you this is what your current credit score is, and we're going to predict for you what it could be after the bankruptcy if you do these positive steps. So it's a tool called Credit Experts. We get it for you, and we'll be able to tell you exactly what your current score is and what you can do. And what we see, Philip, is a lot of times those predictive models are showing either a 50 to 100% increase in the credit score within 1 year after filing the case.
Oh, wow. Well, absolutely. Frankly, what I was thinking about when you were saying that is that's for people who don't even rebuild, right? I mean, we can even see a bigger jump. I mean, I invite, and you can always invite your prospective clients to our Jumpstart Your Credit sessions. We have these sessions where they're live, right? And we're hearing these questions from our students, but they're also talking about their success stories, right? I mean, it's very common to go from, we've had people go from 550 to 720 in a year, right? Not 50, 100 points, but it's because they're not just using the bankruptcy as a springboard, but they're using the bankruptcy and the tools that your office gives them on how to rebuild around the bad credit. That's the key point, rebuilding around the bad credit.
Exactly. And, the reason why Philip and I got involved years ago is that I've been doing this for 20 years, and I see tons of clients who come in, and the bankruptcy attorney's job is to help you through the bankruptcy process. And so that process can last 3 to 4 months after the case is filed. And then after that, technically the attorney-client relationship is resolved and you move along your way. It's kind of like a family law attorney who completes the divorce proceeding, gets you the order of divorce, and then you're on your way. But there still may be other things that come up. I mean, you may still have a spouse who's not paying the child support on time. You may have an ex-spouse who's supposed to be paying a portion of debt and they don't. Well, then what? So we still want to be a resource for our clients afterwards. And so with Philip, we've developed an awesome program called 7 Steps to 720. And that's an education program that we enroll you in as clients of our firm so that you can get more information and actually guide you through the process after the bankruptcy on what you need to do. Isn't that right, Philip?
Oh, yeah. I mean, and kudos to Allmand Law and you, Reed, because when we first connected, years ago, like you said, 10 years or so ago, you were right out of the gate. Absolutely. I want this for my clients after the bankruptcy. I want to help them rebuild their life after the bankruptcy. You were always thinking about them long term. And I got to tell you, I talk to a lot of bankruptcy attorneys. Like, this is my world. I work with bankruptcy attorneys all day long. And most do not think. Most of them look at it like a transaction. Okay, great. I'm going to come in, file the bankruptcy, then they're on their way. Because most people don't file multiple bankruptcies in their life, right? But you always had that long view. And I just give you props on that. And that's why I love working with Allmand Law.
Well, thank you. And the feelings is absolutely mutual because we want to help the clients out there get the benefit, because just getting the discharge doesn't guarantee you that you're going to get the end result that you're looking for. So let's delve into that a little bit more, Philip, and let's talk about specifically what it's like for somebody who starts enrollment in the 720 program. What things are they going to do and see and learn, and how does that program work?
Yeah. Okay. Well, so they go to Allmand Law, they do the free consultation, they jump through the steps on whatever you need to do to file the bankruptcy, whether it's a Chapter 7 or a Chapter 13, regardless, right? From that point, you enroll them into our program. And we're going to give them a username and password to begin with as, accessible to simple videos, right? And what I learned early on, if it was too complicated, people didn't watch it, right? Credit scoring's not fun. It's not like going to get a massage or going to Disneyland or something like that. It's like cleaning out the garage. So it had to be easy, right? So these videos, first of all, are between 3 and 7 minutes long. That's it. Really, really simple. And they really boil down to 3 things. One, getting the errors off your credit report, right? And as you know, Reed, you can talk about this better than I can. After bankruptcy, there's things called post-discharge violations, right? And we work to get those things off for you. Very, very simple, very easy. The letters are there. You print it out, you send it out. Easy, right? Second of all, you reestablish your credit through revolving credit cards. These are like secured cards or any type of thing that on your credit report shows an REV or revolving. And with regard to revolving credit cards, not all credit cards are created equally. According to a Federal Reserve Board study, 46% of credit cards don't report the proper limit to the bureaus, which impacts your utilization rate, like we talked about earlier. So you could have perfect credit card, no late payments, and it could be impacting your credit score 30, 40 points because they're not reporting the proper credit limit. So we teach you and help you navigate that. And then third thing is the installment line. You need some type of installment line reporting. Now, we don't recommend going out and buying a car if you don't need one, right? But we work with you on where to get that. You do those three things, you sit back and watch the rose bloom, and it blooms every time. And it's just that's what we work in. So you can access it through the portal, you can access it through our customer service department, or as I mentioned, we have the Jumpstart Your Credit sessions. And this has really turned out to be probably the crux of our entire platform, because where do you go and ask a very, very specific question about credit and hear all these other people with the same exact things? And not only that, be uplifted because you heard someone that filed bankruptcy 9 months ago and now has 720 credit score. And that's what these calls are. We have these calls every other week. They're live. I'm on every single one of them, and I'm just unpacking these questions so that we can get momentum, because the quicker the clients get in action, the quicker we produce results for them. So that's a high level view.
That's wonderful. And nowadays the credit score, a lot of people internalize and they actually validate it as almost like their social score on how well they feel like they're doing, in their life. And I can understand why, because a lot of things is tied to your score. I mean, if you're going to go and purchase a car and you have a double-digit interest rate compared to a single-digit interest rate, you're going to save thousands and thousands of dollars over the life of that loan.
Thousands a year. Reed, thousands of dollars per year on a $15,000 car note. We're talking between $200 and $250 people pay extra because of their credit score per month. That's $2,400 to $3,000 per year. This is seismic. It's very, very important.
So, I mean, what could you think of, if you visualize right now in your life, what could you do with an extra $3,000 a year? You could save for your kids' school. You could save for a down payment on the house. There's so many things you could use this money for that otherwise is just evaporating. It's just extra car payments that you don't even realize. And it's not just cars. Yeah.
Yeah. And Reed, think about this. Okay, so say someone has $15,000, $20,000 in credit card debt. They're listening to this and they're like not sure what to do, right? Chances are they're overpaying already on their car note at some capacity, right? The beauty about the laws of bankruptcy, and they were created years ago. I mean, this goes back thousands of years, where you can forgive your debt every 7 or 8 years. But no, it wipes off the debt and gives you the fresh start. So you're not paying extra on that car. I mean, really, if people understood, I say this often on the calls, if people understood what I know and what you know about bankruptcy and how it does give you the fresh start, there wouldn't be as much shame into it. But I'm just convinced the shame and the embarrassment that people feel around bankruptcy, it was created by like a PR plan by the banks. It's got to be, because they're the ones that have a vested interest of you delaying the bankruptcy. Every month they delay the bankruptcy, it behooves them. Excuse me.
Yeah.
You get where
I totally understand. And when you actually sit down and crunch the numbers, which we do at those consultations, and say like, oh, you got $20,000 of credit card debt and you're paying X amount per month, and also you've got this car, and depending on what option we take them, Chapter 7 or Chapter 13, sometimes we can reduce the interest rate. We can do a redemption loan where people can redeem their car for just the value. If you haven't watched a really good prior blog video that we did, that's a good companion piece to this, is the 5 ways to deal with your cars. I'd encourage you to go back and review that blog. I'm not going to get in, the video that we did on that, the podcast, because it's great. It really will show you the 5 ways to deal with this. So there's a cumulative effect, absolutely, to coming out of bankruptcy, because people throw it around flippantly, fresh start. It's a life-changing fresh start. It is, you're really removing mountains of debt off of you, and you're starting the new path with your new financial knowledge, which nobody teaches. This is not a class in high school or college or any life skills class that anybody teaches you. But you're going to learn that coming out from our office and start your new path, and you're going to be saving thousands of dollars a year, hundreds of dollars a month, on things that you didn't even realize that you were spending them on. That includes car insurance, that includes the car payments, that includes opportunities for advancement in employment. When employers are pulling your credit, there are so many things that this will help you with.
Well, Reed, and if I can just jump into the fresh start thing one more time, it's unique to the bankruptcy attorney. I can't stress this enough, right? Because we have people that find our program just on their own. So let's just say they file bankruptcy 2 years later. They're like, they want to buy a car and they realize they're overpaying $200-300 a month. So they contact us, enroll in the program, they join the question and answer session, and I hear this often. Oh my goodness, I wish I would have known. Because what they did is they found, Joe bankruptcy attorney down the street, who all he did was file the case. He didn't tee them up for a fresh start. He didn't set them up to rebuilding their life. And then what happened is, they became a cash-only citizen. In their mind, they're like, oh my gosh, I'm not going to get another credit card. The exact wrong thing to do. So it's unique to Allmand law, right? That's the key. It's bankruptcy is not a fresh start for all attorneys, because I see it happening in my life all the time. They come to us and they're like, oh my gosh, I wish I would have known. So anyways, I just made sure that people clear on that.
Well, thank you. I appreciate it. One of our core values is our passion for helping people. And that is what really motivates us, because, work is work, and sometimes you can, there's things you can get tired of stuff. But if you really get charged personally by helping people and helping people transform their lives with legal tools that are available to them that they just don't know about, and you can show them that path, that is super fulfilling. And that's what I enjoy. That's why I enjoy my job. That's what all of my staff and attorneys and people that we all work for, that's what motivates us. And so thank you so much for those kind words and for, validating what our objectives are here with what we're trying to do.
Yeah, well, I've seen it over the past 10 years.
Yeah.
Right, firsthand.
So we've talked a little bit about cars and stuff, coming out of bankruptcy. And a lot of people think, well, if I file, nobody's ever going to give me a car again. I'm never going to be able to get a house. Mm-hmm. No one's ever going to give me credit again. It's over. Yeah, I got a fresh start, but, what am I going to do? Can you speak to that?
Oh, yeah. It's one of the great misconceptions. Again, most likely, put out by banks and credit card companies. First of all, you can absolutely, get new credit, right? You can rebuild. That's the whole function of our program, is rebuilding your credit around the bad credit. We've talked about cars. Regarding homes, right? I have this great audio from a client of mine who called me one day, and he's like, I just got to tell you, when I considered bankruptcy, I was embarrassed, I was nervous, I was ashamed of it. You talked me into it. You shared with me the truth on bankruptcy. We filed bankruptcy, and exactly 2 years and 2 days after the bankruptcy, they closed on a new loan, an FHA loan, 3.5% 30-year fixed. 2 years and 2 days. I mean, that's a FHA rule in their guidelines, right? 2 years after the Chapter 7 bankruptcy. And what was interesting about this link, and Reed, if you can put this link somehow on the blog post or on this podcast, we can provide it to you. It's his mortgage payment was lower than his rent payment, right? So that's the first thing on a Chapter 7 bankruptcy. And on a Chapter 13 bankruptcy, we've had hundreds of clients that have raised their credit score during an active 13 and went and bought a new home during an active 13. And that's because they have the right credit score, another FHA product. And this is It's happening all the time. People just don't realize it.
I can't tell you how many times I've sat in a consultation with the client and I've told them that, and I can tell that they're not 100% believe me. So I just spin around my monitor and I just Google, buying a house after Chapter 7 bankruptcy or after Chapter 13 bankruptcy. And you could do that at home right now if you want to try. Just Google it. It'll pop up. It'll be FHA website, so you know it's a legit website. And there it is. It's spelled out in black and white on their website, their guidelines, exactly what Philip just went over. 2 years after the Chapter 7 discharge, 1 year after the Chapter 13 has started, if you've been making your Chapter 13 payments on time. And that is really life-changing and shocking, because so many people nowadays are renting and they absolutely desire to be homeowners.
Yeah.
And there's a lot of reason for them to be homeowners. I mean, because you're, like you said, if your rent is more expensive than what you could have in home, you're building equity, your home is appraising. That's a great investment for you. Not just the fact you're saving money every month, but also that you're building equity and a future in real estate, which over time has always appreciated in value. So that's a wonderful news and a great thing to hear for a lot of people considering doing the bankruptcy.
Yeah, absolutely.
So a lot of you out there right now, you may be skeptical, but I want to tell you, if this resonates with you, if you are losing sleep at night, if you're worried about your credit, how you're going to pay your credit cards, if you know that you're overextended on the car, you got a horrible car deal, you may be behind on your rent, you may be behind on your house, now's the time to do something about it. We understand that bad things happen to good people. Our objective here is to help you reclaim your power for financial independence, and it's absolutely free. It's super easy. Just call us. Call us at 214-265-0123. Press option 1 right now. I guarantee you there'll be no shame, there'll be no judgment, only empowerment, only options. And if it's right for you, great. If it's not, we'll tell you that as well. Only about 60% of the people we've talked to are a great fit for the bankruptcy. So I don't want you to put it off. And so I just want to make sure I got that out there, because so many people procrastinate and they put it off and it just gets worse. And one of the things that I always warn people about right now is, refinancing your home. There's so many ads going on right now. Interest rates are low, get a home equity loan, cash out the equity in your house, pay off your credit cards. I think it's the worst decision you could ever make. Philip, what do you think?
No, are you kidding me? It's when people see what I say to people when they say that to me all the time, should I, take my money out of retirement to pay off my credit cards, or fill in the blank, whatever they say. I'm like, you have to protect your family first. That's it. Protect your family first, and don't worry about your credit score, and don't worry about the banks, right? And so, no, I absolutely agree. Before you do anything, talk to Reed, right? Talk to Allmand Law. You need to know your choices before you spend your money and pay off this debt. And I will tell you, these collection companies, they call and they manipulate. They work on emotions. They're paid on commissions. They're trained on how to push your buttons. Don't let it happen. I've seen it. Do not let it happen.
Right. So that was one of my tips. And the final thing that I want to get across to for everyone is, you'll hear lots of times, I would say, if you hear an ad saying don't file for bankruptcy and do something else, you should probably just file for bankruptcy. I mean, or they wouldn't be telling you not to do it, because they know that you really should be doing it. But one of the things that I hear all the time is, don't file for bankruptcy. We'll negotiate your credit cards for you. And so let's talk about, we're talking about credit right now. So let's say that you have 5 credit cards with $5,000 balance on each one of them. In order to negotiate the debt for you, you're going to have to get into uncollectible status, which you're going to have to stop paying on it, which potentially it's going to be sold to somebody else. You potentially are going to get sued, and then you will potentially be able to settle with them for 20, 30 cents on the dollar. Sounds like a good idea? Philip, what happens to somebody's credit who does that?
Yeah. So what happened when you go into negative status? So let's just pretend you're not negative right now. You go into negative status. Obviously, your credit score goes down, and then you're paying it. You're in the same place credit-wise as if you just declared bankruptcy immediately. But the only difference is financially, you're paying that 20%.
Right. Yeah, exactly. And then there's a special surprise. If that wasn't good enough, there's a special surprise that a lot of people don't know until after they've already done this. And that is that if more than $600 of debt is forgiven during this negotiation process, they are required, the creditor that forgave the debt is required to file a 1099 with the IRS. So what that means is you have $5,000 credit card, let's just say $10,000 for easy math, and you settle for $2,000. Well, they're going to file a 1099 with the IRS as if you got paid $8,000 because you were forgiven a debt of $8,000. You've got a paycheck basically for $8,000. Now you have to pay income taxes on what they wiped out.
Yeah.
And now you owe the IRS. And we know if you owe the IRS rather than a credit card company, they can do a lot more ugly things to you than a credit card company do. They can garnish your wages, they can take your property, they can levy on you. When you file bankruptcy and we wipe out this debt, there is no 1099. There is no negative drawn out process. There is no one coming to your work to serve you a lawsuit and the stress of that. There is no one coming to clear out your bank account because they got a judgment against you. So I don't want to over dramatize it, but please, if you're considering or you're listening to those people telling you, hey, we can negotiate your credit cards, the reason why they're saying don't file bankruptcy is because they know that you should. And if you don't, this is what's going to happen.
And if I could read, just at nothing else, look at your options and then look at the bottom line cost of it. The cost of negotiating on that $10,000 debt versus the cost of bankruptcy. I mean, just look at all of the options, right? Here's what it does for my credit, debt negotiation, bankruptcy, right? Here's what I'm going to have to pay, debt negotiation, bankruptcy to the creditors, right? Here's my tax ramifications, debt negotiation, bankruptcy, and then just black and white costs of it, right? What's it cost? And you'll see from those stats. Just do your due diligence, and it sort of like the answers unfold for you.
Well, Philip, I can't thank you enough for taking time out of your day to join us. I think we got some great information. Thank you so much. It's great to have you as a guest today.
Thank you for the opportunity to be here, and just it's my pleasure, Reed.
Thank you, Philip. So everyone out there, we talked about credit today. I was encouraging you that if you are considering this, if you have questions, if you want options, just like Philip said, we're going to spell it out for you in black and white, absolutely free, what all your bankruptcy and non-bankruptcy options are, and then you get to make the decision. That's why we're saying you get to reclaim your power for financial independence, because you can't make a decision until you know what your options are. So reach out to us right now at 214-265-0123, option 1. Speak to one of our specialists. Get scheduled that free virtual consultation from the comfort of your home. We'll tell you all your options. We'll tell you your credit score. We'll predict for you what it could be after the bankruptcy, and then you can make that informed decision. We look forward to hearing from you. You can also reach us on our website at www.allmandlaw.com. Can't wait to hear from you, and have a wonderful day.